hammer pattern. You can see on the screen we have picture of Thor with his famous hammer on his hand, the most powerful hammer. But our hammer is a bit different. Let's check out. It's a bullish reversal pattern where buyers are momentarily in control. Length of the wick should be twice the size of the body. Let me show you. So this is how a hammer candlestick looks like. This is a green hammer and this is a red hammer. The size hardly, sorry, the color hardly matters. So just try to understand the concept here. This is the body of the hammer and this is the wick. Opened here, it closed here, it made a high here. This is the high and close. The high and close is the same. Okay, but it went down also. But the price could not sustain. The buyers pulled the price and closed the price here. Are you getting my point? Let me repeat. Market opened here and it went down. It went down. Somehow it went down. But bulls came in or the buyers came in and they pulled the price till here and ultimately it closed here. This is the wick and you can see the size of this wick is more than twice the size of this body. Body is small, wick is longer. Opened here, this is the low or this is the price rejection point and ultimately closed here. Similarly, as mentioned, the color doesn't matter. Okay, this is the body of the candle. Though it made a low here, but buyers somehow pulled the price and closed here. Though it made a high here, it made a close here, but ultimately this is the rejection point. Hammers are mainly required to understand the rejection price of the market. So these hammers are telling us a rejection price. Let's understand hammer with the help of a chart. See, market was in downtrend. Market was in severe downtrend. We can see on the screen. After that, sellers tried to push the price, but somehow buyers came in. Buyers came in, and this is the lowest price of the hammer or the candle. But after that, buyers came in and they pulled the price. They pulled the price and ultimately closed the price here. So this is a price rejection. Hammer shows that yes, the market is not ready to go to that price. So though the sellers tried to take the market to this price, but buyers came in as they were not at all happy with the price and somehow they pulled the market and see, it started going up. Hammers are important to spot a reversal change. They shows the bullish reversal pattern. Again, you can see market was in downtrend, market was falling, and this is a long wick. See, the size of the wick is much longer than the size of the body. Okay, this is a pure hammer. This signifies the price rejection, which means that the bulls which are present in the market are not ready to take the market to that price, and after that they pull the price and see, there was a trend reversal of the market. So hammers are important to spot the trend reversal of the market, and this is how a hammer looks like. You can see this is hammer, this is a hammer. So whenever you spot a hammer on a falling market or a downtrend market, just be cautious because there's a high chance or good probability that the trend of the market is about to change and market is about to go up. So this is the main importance of hammer. Hopefully you all have understood. We'll be dealing with the hammer and other candlestick patterns later when I'll be dealing with strategies and all. Then you'll have a much clearer picture why these patterns are important when we'll be dealing with the trading strategies. Anyways, thank you so much.